This is breaking news.
Well, welcome back, and we're getting breaking news just any moment now. The jobs numbers for March, of course, and really just to remind you, the call is for gains, fairly muted ones, of about 2,500 jobs created in the month. That's versus that shoot the lights out figure of February of 47,300. Maybe there's a revision downwards to that particular series from February just to reflect subsequent moves in the data collection. Here we have an 18,100 build, and the unemployment rate falling to 5.8%. 5.8%. The unemployment rate is now sitting at, just to repeat that one, 5.8%. So that is a surprise, and that is on a build on full-time jobs of just on 18,100. That is quite extraordinary. Just to okay, just to repeat it, 18,100 net jobs created, and the call was that we would see unemployment rate rise, but it has actually fallen to 5.8%. Quite impressive news there. The participation rate sitting as expected at 64.7%. We got a build in full-time jobs of 22 of actually a minus 22,100. So let's just also look at the Australian dollar. Oh, look at that dollar, 94.25 US cents, just absolutely punching through resistance. I can tell you the next figure is 94.48. It needs to get to that level and get over that hurdle, but it showed absolutely no hold back when it comes to the 94 level. Just smashed it and has pushed towards 94.48. Simon Boulton from Aequalis, live in studio with me now. Simon, reactions, jaws on the floor.
Jaws on the floor.
5.8%.
Very unexpected and significant fall from 0.2%. Again, economists predicting it might rise. Again, I think the cautious there were saying it will stay the same. But I have to say that it is following some other indicators. Yes, employment is a lag indicator, but GDP up, customer confidence up, exports up.
It's a job ad series up.
Exactly.
Yes.
So, but I think there was an expectation that it would take slightly longer for the employment figures to catch up with those things. So this is a surprising but impressive and pleasing result.
And what we really need to see, though, is the breakdown. And just before we get to the breakdown, the participation rate to have held steady. How do we account for the fall when we haven't seen that participation rate do what it might have done, which was perhaps rise to show that more people were out there looking?
Yeah.
We didn't see that. We just showed it hold steady. Just walk me through that paradigm.
Until we see the numbers behind the numbers, those are always difficult things to really comment on. But it's good to see that that hasn't risen. Oh, sorry, it hasn't fallen. I think if that was the other thing that we had seen decreasing, now we're seeing that stabilise at 64. Once that starts rising, then I think we'll have the matching perfect storm of unemployment rate falling and people looking for work.
Now, here's maybe a caveat. Here we get the breakdown. Part-time jobs, a build of 40,200. Full-time, shedding.
Decreasing.
22,100 full-time jobs gone. That is rather sobering.
It is, and this is where the figures are sometimes confusing. A fall in unemployment, but less permanent jobs. Yeah. We've seen this as a trend. There are more contracts and temporary and part-time roles that are being put into place. We're still seeing at Aequalis many of those short-term roles going on, extending, or indeed turning to permanent. So I don't think this might be as black and white as work's being turned into part-time work. I think it can be seen actually as a lead indicator in that unemployment figure getting even stronger. So no, I don't think there's too much in there that should be too sinister.
Keep sitting there if you would, please, Simon. Let's go back to the dollar. Animating in 94.41 now. Needs to get to 94.48 to break fresh resistance, but of course 94 was the next hurdle, which indeed it just kind of like one of those super tankers racing through the Southern Ocean, just smashing everything before it. It was incredible, the move. Simon, you got to say, 5.8%. It's just incredible to believe that some investment banks are still calling for rate cuts this year at 5.8%. There's got to be revisions to those projections, surely.
I would think there has to be. I mean, this might be the turning point that we have been waiting for. You know, inflation is still looking like it is. It could rise, and with that, I guess the RBA does have to take the appropriate action. But, you know, we've got to remember that this employment figure is always a lag indicator. So I think that this is, you know, great news and something we can take that going forward. We may have peaked on the unemployment numbers.
Just to repeat, it's a 0.5 cent rise for the Australian dollar to 94.35 and getting even stronger. So 94.37, 38, yes, 94.48 would be fresh resistance. The hours worked have risen. 8 million. So put that alongside the build in part-time work. It still suggests doing more with less.
That's right, and I think that's still going to be a theme that we'll see. You know, obviously costs are still a big concern for organisations, and you know, if they are able to hire one person rather than two, they will. And we certainly do see jobs that were perhaps jobs that would have been two people's work now being put into one job itself. So this, I think, just reflects also it's getting more automated to do business. You know, the fact is you don't need as many people in many industries. So that isn't something I think that's too shocking.
How is the industry, I suppose, mindful and reacting to the prospect of rate rises? Only insofar as if you're pushing more people into part-time work and you're getting them to work longer hours, potentially you're paying over and above in a short-term sense. You're having to dole out more from an employer point of view. Now, that would be potentially inflationary. And with a falling unemployment rate below the 6 handle now, that could stoke inflationary concerns. We know already the number for the RBA is sitting towards the top end of its band. You can't rule those rate rises out.
I don't think so.
Sooner than expected.
I don't think so. Again, I'm not an economist, thank goodness, because sometimes I get it right. But I think the truth is that these figures do show there is some more activity. You know, the stock market hit, what, nearly a 6-year high just today. You know, we're seeing these other results outside of the employment figures that are just astounding. You know, whilst we've got unemployment at a 10-year high, we've got other things that, you know, these other indicators I spoke about earlier, they're at 10-year highs. So it's just this difficult balance to reconcile, Carson, that we try and do every month and sometimes fail.
You were potentially calling a peak in unemployment, but I suppose it's important to look backwards now and look at that February figure, which was 47,300. Yet to just see if that's been revised. But if that is revised lower, do you temper your optimism?
No.
You don't?
I don't.
So you still remain of the view that a trend is locked in?
A trend is locked in where we might see that very small incremental trend coming out tapering. I don't think this is an unusual result because there's such a sharp fall. That will probably be corrected over the next month or next couple of months. But I do feel there's a sense of people getting to the top of that unemployment cycle. You know, we're finding clients are more confident. People are now talking about doing things and actually doing things. You know, I think last year was the year of might be, could be, maybe we will. This year I think things are actually happening. So it's...
What's been your biggest takeout in the last month? So the last time we met, what have you kind of been most surprised at in your day-to-day?
It's following a trend of, we're seeing work where there's more government assets being put through private partnerships.
So what, contracting out?
Well, no, public-private partnerships.
Okay.
So the government's selling off assets or improving assets through private companies, which works for everyone. The government's able to bring in more revenue, which it needs, but also the private sector gets the employment numbers to go up. So certainly that construction, engineering, those sorts of areas are improving. I think also where, you know, as the need for the mining sector decreases, you know, we have to see that calibrate with this increase in the infrastructure areas, and the skills there are quite transferable. So that's where I'd see that balance being achieved more quickly than we might have thought.
What about finance jobs? Because what was interesting about the job ad series on Monday was that we were seeing an overweight move into newspaper ads, which tend to be, as we're told, the more blue ribbon type roles, where you take a quarter page out potentially or a third or whatever to really flag a C-suite-esque offering. Is that to you indicative as a forward indicator that maybe the job shedding in finance might have plateaued as well?
Yeah, I think that, again, it's not a broad brush over the finance jobs. You know, at the moment, organisations need to know why, what, when, and so we're seeing lots of finance roles that are, you know, the analysts, the commercial assistance roles, the ones where they're really supporting the business. You know, even if the business isn't making money, they need to know why. So those sort of finance jobs are certainly in demand. You know, there's still that lower level, more automated work that's continuing to, I think, remain steady, if not decline. But the banks are getting busy. There is activity out there.
And are you, though, from your point of view, are you seeing what's coming in with demand matching these numbers, i.e. an overweight part-time demand versus full-time? How does it play out for you at Aequalis?
I think it's that contract and temporary hiring is still very high. What we are seeing, though, that's encouraging is some of that being converted into permanent roles. So organisations, I think, are still hedging their bets slightly. Your point about the newspaper advertising, it's a big commitment for an organisation to take out a half-page advert in the AFR and say, we're hiring, look at us. So I think that does show as well that there's more real hiring actually happening out there. And at that C-suite, which means that will probably follow on with people at the more junior levels as well.
Break it down for me state by state, not because I can tell you those numbers to the minute, but just in terms of where you're seeing the green shoots.
Green shoots, I think.
Horrible term, but yeah, where are you seeing them?
I think New South Wales is certainly showing those, as Queensland and WA look a bit more shaky. Victoria's a bit of an anomaly from the last figures that we saw last month, so it'll be interesting to see how that pans out.
The West, what about the West, the vaunted West? Western Australia.
I think there is this, it is about rebalancing or reshifting where Australia's strength is. Mining we know is going to be flat, so what's that going to be taken up by? And I think this infrastructure engineering, housing's another one that's up incredibly high for the last 10 years. So I think that's one of the ways that we will rebalance things, and lots of economists are calling that rebalancing. So I think there is, again, encouraging ways that this is all going to play out.
All right, so just let me remind people, if they've just joined us, because you are seeing on screen there a fall from 6% in the headline unemployment rate down to 5.8%. That is based on a participation rate of 64.7. The consensus was for 64.8. So now we look at that more closely. It was a little bit off the consensus. So a little bit of weakening in the participation rate, which potentially does, of course, just put that number in greater context. But the overweight build and part-time work really kind of continuing on last year's trend. A build of 40,200, while full-time roles were actually shed to the tune of 22,100. The call had been that we'd see some jobs growth, but more muted this month, to the tune of about 2,500 roles added. In the event, we got 18,100 for March. And that unemployment rate falling, not on consensus, which had been for a rise, but falling down below 6% now to 5.8%. Unexpected in the extreme, and that's made a big impact on the Australian dollar, which of course is going to get a fresh test in about 20 minutes time when the Chinese trade numbers for March are released. That really could swing the dollar into fresh uncharted territory, that is to say back towards maybe even 95, but still it's got to get over that hurdle of 94.48, and it's fetching 94.35 as we take a very short break. Simon Boulton from Aequalis, I want to thank him for his instant analysis, been with me alongside. Thank you, Simon.
Thanks, Carl.
See you next month.